You say in the commentary, not an easy year, but signs of easing at the end of the previous year, accelerated during the year under review. So it looks like things starting to pick up.
Yes, yeah, we definitely seen an uplift in the areas that we focus on. Oil and gas is a key focus area for us, and I think with the rebound in the oil prices over the last 18 months or so, it's had a nice impact on our business in Middle East and USA, and we've also had strong trading in Africa and some of the rest of the world territories that we operate in.
Of course, 41.5% of your total revenue is earned in foreign currency, so that stronger rand still, one would assume, one of your Achilles heels at this point.
Yes, it is, and I've really stopped complaining about it because it's been a year-on-year thing for the last couple of years, and we will get a benefit, I guess, when the rand weakens. But for now, particularly with the weak rand, I'm satisfied with the results that we've achieved.
And it looks like you've done quite well despite the rand strength during the period. You mentioned some of the territories where you were doing well. You point out in the commentary that Europe and particularly the UK under pressure at this point. Yeah,
we've definitely seen not the acceleration of the recovery that we've seen in some of the other territories. So our UK business, we're still seeing the economy very sluggish, and that's carried forward into our operations as well. So we just have to fight through it.
Of course, there is a distinction to be made in terms of the kind of business you do in those areas as opposed to what you do on the continent, right?
Yes, that's correct. So there's really two major components to our business, the security component and the fleet management component. The security component is mainly, for now at least, an African play, whereas fleet management is the focus area in the first world kind of economies where we operate. UK, Europe, USA, and Australia is really primarily a fleet management play. We don't offer security services there.
Of course, in those territories where there's such a focus now from businesses on cost efficiencies moving forward, to what extent are you seeing growth and an uptick in fleet management services?
Yeah, there are a lot of key drivers, and you've mentioned one of them, which is cost. Another one is occupational safety, which in the first world territories is a big focus area from the governments, particularly to improve road safety, etc. CO2 emissions is another one. So there are a lot of positive drivers for our business that combine for strong growth. We've seen a 40% increase in our fleet subscribers over the past year, so we're very excited about that.
How about the expansion of the security business? So while you have fleet management globally, how about security globally? Because I should imagine there is a growing demand for that in some continents, particularly South America, as you were mentioning a little earlier.
Yes, correct. So security, there are pockets of opportunity where the demographics are such, maybe similar to our South African operation, where they combine to make a security service attractive. South America is a huge potential opportunity for us, particularly Brazil, which is a territory where we're eyeing quite aggressively.
And a big population.
Huge, and a huge vehicle population, much bigger than South Africa. It's really an enormous market for us.
Of course, where you've got strong competitors on the fleet management side, what kind of competitive advantage do you enjoy on the security side when looking at opening up internationally, that division specifically?
Yeah, so the market is definitely competitive, and we have the advantage of probably more experience than most in the particular industry. We've got 16 years in this game now, so a lot of skill sets have been developed out of Africa in the security field particularly, but it is definitely an extremely competitive market. And having said that, we've proved time and time again that we can compete against significant competitors both locally and internationally, and carve out a decent market share. So we'll continue doing that.
Now, as you grow the security business, does your annuity income or annuity revenue rather increase? Because I see already makes up 57% of total revenue. So quite nice to have that strong annuity base. Will that then grow?
Yes, so that's by far our biggest focus area, is on cash generation and building that annuity component, and it's really a key indicator of the strength of our business, and we need to drive it, even more aggressively, higher than the levels that it is currently. So, but it's a strategic focus, and it's a focus that, it's a strategy that's paying off thus far.
Being mentioned is 56.9 million rand in capex. Run us through where exactly you're spending money over the next year.
So biggest by far in our business is development. So development costs is by far the biggest spend. We've increased it dramatically over the previous year, and we intend to maintain that increased investment in that field, going forward. So we have a very big development team, well, relative to our business, down at our development centre in Stellenbosch, just outside Cape Town, and we have over 60 engineers there that live, eat, breathe, sleep the development of our products and services, and that's by far the biggest CapEx expenditure from our perspective.
Well, you mentioned that strong cash position and the strong cash flows you're getting, 190 million in cash generation over the last year. You've paid down your net debts, 55 million you paid down. You're sitting with net cash now. You've also increased your dividend by 20% to 6 cents, so good news for shareholders.
Yes.
Would you expect the strong cash generation to continue in the current year, or is that what you're seeing?
Yes, it is. So again, it's annuity revenue and cash are our big focus areas, and although we have increased our expenditure in terms of the development field, we would certainly expect our strong cash generation to increase. We do have some new significant product launches this year, which will probably be
What kind of products? Tell us. Give us a preview.
Well, preview, we're certainly launching a low-cost play into the South African market later in the year. It's an area where we typically haven't played at the low
tracking
end.
system.
Tracking system, yeah. We haven't typically played at the low end of the market. We've been a more of a high-end niche player up until now, and the volumes are definitely at the entry-level vehicle price of the market, and we've got some exciting technology that we've been working a couple of years on, and we intend we're going to be launching in the first half of this year, in fact, so we're excited about that. And any new product launch and with a new brand as well, because it does have a new sub-brand associated with it, will eat some cash. But we still expect our strong cash flows, strong cash generation and operating cash level to increase.
Stefan, just out of curiosity, I mean, what's your recovery rate at this stage on the security side?
Yeah, in the 80s. So in the mid 80s, we're not happy at those levels. We fight very hard to get it back to the 90s levels, up in the 90%. But it is a tough fight, and we think our recovery rate is certainly up there amongst the highest in the industry, and we're proud of that. But we're not happy that I'd only be happy with 100%. Frankly, we'll ever get back there, I'm not sure, but we'll keep on fighting for it.